Hello everyone, my name is Hong Bao. This is my individual assignment for financial technology and digital innovation. So when I'm doing my research for Fintech, I found some interesting tracks of it, which are core infra, payment, digital banking, customer leading, and business leading. I'm going to talk about one of the tracks of Fintech, which is called core banking and infrastructure. And the company chosen for this track is a pre-IPO startup, Plaid.
What is Plaid Technologies and how were they founded? Here's how it happened. First of all, what is Plaid? As we said, Plaid works as the plumbing that connects apps to users' bank accounts to confirm the account holders. It's a financial aggregator that offers an API or an application programming interface, allowing companies to connect to their users' bank accounts. Plaid then makes its money by charging a fee for using its service, operating a freemium business model. But Zach Perrett describes the journey to founding Plaid as somewhat of a lucky accident. Perrett began his career working in financial services for Bain Consulting, and quickly saw that the financial industry was lagging behind massively when it came to technology. He didn't find consulting massively interesting and wanted to join a startup. Alongside his friend William Hockey, who he'd met at Bain, the pair then started a series of side projects to understand what sort of startup they wanted to join. They built an app called Rambler that mapped out consumer banking activity, but they quickly found that extracting data from banks and making it useful and available to the general public was particularly difficult. So they started building their own bank integrations, which led to interest not in their app, but in their back-end infrastructure. That was their light bulb moment that they could build a business from their technology and their infrastructure. So they set up in New York in 2012 with Perrett as CEO and Hockey as CTO. And they struck gold instantly, working with Venmo to help settle payments faster, as Venmo were historically settling transactions in big batches, but allowing customers to transact instantly. This was an issue for Venmo, as it meant that they would have to put up the cash until the payments settled. But with Plaid, they could transact with banks in real time, and so Plaid built Venmo's back-end infrastructure, which they still use to this day.
Well, I made up a story for you to understand the main business of Plaid easily. So the story's main characters are a little bear and a bunny. Bear needs to pay back $10 to bunny, and the bear chooses Venmo, which is a P2P payment app available on iPhones and Android phones that allows for quick and easy exchange of money directly between individuals. Bear didn't have Venmo before, and then when he got a Venmo account, the first thing he did was to connect his bank account to it.
Before you can use Venmo, you need to complete these 4 steps. The first one is payment method. The second one is instant verification. And then you need to use Plaid to verify your bank account. The last step is bank authentication.
So if we open up Venmo, you can see there is something called the payment method. Press instant verification and there is a pop-up at the bottom. It says Venmo use Plaid to verify your bank account information. So Venmo doesn't process the verification itself. Instead, Venmo goes to Plaid, a third-party company for this service. And now this UI we are looking at is the UI provided by the Plaid API. Basically, it supports traditional bank payment authentication as well as new digital banks like Chime. After you select any bank that you like to use, you can complete the final step of authentication, which is to authorize payment your bank account and password. Now you are going to ask what happened to the small companies before Plaid was initiated. And that's the problem. Without Plaid, if 100 small companies want to collect money from users, they might have to integrate with banks 100 times. First of all, the company may not be able to do the integration. Second, it may not be able to guarantee the quality of the integration. So here comes the startup, Plaid. The small companies just need to use their API to go through this payment authentication process. The other thing need to be discussed is that Plaid is the current monopoly in payment authentication. It has completed integration with American banks and platforms like Robinhood and Venmo. The quality of its API is outstanding, and if it keeps up, Plaid users will only increase in the future, not decrease. So this is one of its advantages. A lot of people are probably a little bit nervous about using Plaid because you need to authorize the bank user's name and password to it. In fact, Plaid uses a method called OAuth to handle this part. All communication is through a token, but the token itself will not store the username and password of users. I will put the OAuth on the screen in detail. The essential tokens from this picture are step 4, which is called access token. Once you have authenticated your bank account, the next time Plaid wants to access your bank account, all it needs is the access token, which means it no longer needs your username and password. That's one reason it doesn't store these two pieces of user information. What information can Plaid get from your account after completing payment authentication? The first is your account and routing number. Next are your transactions, your investments, your salary, and the balance in your account. So you can see Plaid is a company with a lot of valuable user data. In the future, its business could be built around that data. As far as I know, one business they plan to do is credit score monitoring. In other words, Plaid knows when the user will take out a loan, and it can also know when the user will repay the loan again. Using this information, Plaid can generate the latest credit score of the user. Let's take a final look at Plaid's profit model. What I found on its website is that its customers are not ordinary people like us, but these banks or financial institutions that use its API. There would be a monthly fee, but in the future, if it has more business, it would be like 50 cents per order to use its API for one time, which is just a guess of mine. All in all, the above is about the introduction of Plaid. After watching this introduction of Plaid, what do you think of it? Do you think fintech companies will reshuffle the market over the next decade? Or are they just some of the high-risk startups that the current environment is spawning? Feel free to leave a comment in the comment section. So finally, have a nice day. I'll see you next time. Thank you.